Will Stacks crypto hit $5? This is a question that's been on the minds of many crypto enthusiasts lately. Currently, Stacks, or STX, is trading at $2.71, sparking curiosity and speculation among market watchers. But what is Stacks, you ask? Well, it's a unique blockchain platform that's integrated with Bitcoin, allowing developers to create decentralized apps, smart contracts, and digital commerce platforms. The STX token is at the heart of this ecosystem, built on the Clarity smart contract language for precision and security. With a maximum supply of approximately 1.8 billion coins and a circulating supply of 1.45 billion coins, STX is making its presence felt in the crypto world. But to understand if Stacks can indeed hit the $5 mark, it's important to delve deeper into its unique features and market trends. One of the remarkable features of Stacks is its proof of transfer, or POX, consensus mechanism. But what exactly is this POX, and how does it work? Let's delve into it. In the world of blockchain and cryptocurrencies, a consensus mechanism is a protocol that ensures all nodes, or participants in a network, agree on the validity of transactions. It's like a democratic voting system where everyone gets to say whether a transaction is genuine or not. Now, the POX consensus mechanism is a tad different from the ones we commonly know, like proof of work or proof of stake. Where these mechanisms reward miners with newly minted tokens for securing the network, POX, on the other hand, rewards miners with existing tokens. And in the case of Stacks, these rewards are in the form of Bitcoin and STX tokens. Here's a simplified explanation. When a miner wants to add a block to the Stacks blockchain, they do so by transferring a certain amount of Bitcoin. This transferred Bitcoin then goes into a pool and is distributed to a set of random STX token holders. In return, the miner gets the right to add a block to the blockchain and is rewarded with newly minted STX tokens. What's interesting is that this mechanism leverages the security of the Bitcoin network, one of the most robust networks in the crypto world, to secure the Stacks blockchain. It's a unique approach that's not seen in any other blockchain. So why does this matter to you? Well, it means that Stacks is built on a solid foundation. It ensures the security and integrity of the network while also giving back to its community of STX token holders in the form of Bitcoin rewards. So, with the POX consensus mechanism, Stacks brings a unique approach to securing its network. Another key aspect of Stacks is its Clarity smart contract language. But before we dive into that, let's briefly touch on what a smart contract is. In the simplest terms, a smart contract is a self-executing contract where the terms of an agreement are written into the code. The contract is stored on the blockchain and automatically carries out the actions it's programmed to do when certain conditions are met. Now, what sets Stacks apart is its use of the Clarity smart contract language. This language is designed with precision and security at its core. Unlike other smart contract languages, Clarity doesn't compile down to bytecode. Instead, it's interpreted directly on the blockchain. This means developers can know with certainty what their code will do before it runs. This eliminates any unexpected behaviors or hidden functions, which are common pitfalls in other smart contract languages. The Clarity language is instrumental in developing decentralized applications and digital commerce platforms on Stacks. It allows developers to write complex logic in a secure and predictable way, reducing the risk of bugs and vulnerabilities. This is particularly important in the world of blockchain, where a single bug can lead to significant financial losses. Moreover, with Clarity, developers can create smart contracts that interact directly with Bitcoin. This opens up a world of possibilities, from decentralized finance applications that leverage Bitcoin's security and liquidity to novel types of digital assets and commerce platforms. The Clarity language, therefore, plays a critical role in the functionality and security of the Stacks platform. Now, let's dig into the market trends and price analysis of STX. As we navigate the ebb and flow of the cryptocurrency market, it's important to take a close look at the performance of individual tokens. In the case of Stacks, or STX, the recent trend has been bearish. The coin is currently trading at $2.71, but the price action suggests a downward trajectory. Now, let's talk about moving averages. These are crucial tools in price analysis as they help smooth out price data by creating a constantly updated average price. The fact that STX is positioned below key moving averages is a strong indication of the bearish trend. It's like trying to swim upstream. The current is simply against STX at the moment. In addition to this, the momentum indicators for STX are showing weak bearish signals. Momentum indicators are technical tools that determine the speed or rate at which the price of an asset changes. Weak bearish momentum suggests that the selling pressure is high and the buying pressure is low. In simple terms, more people are selling than buying. The support and resistance levels for STX currently stand at $2.06 and $3.26 respectively. Support levels represent a price level where the asset's price has difficulty falling below, while resistance levels signify a price level where the asset's price has a hard time breaking through. But remember, these numbers are not set in stone. The crypto market is highly volatile and can change in a blink. So while these figures provide a snapshot of the current market scenario, they are not predictors of future performance. It's also important to note that this analysis is for informational purposes only, and not financial advice. Always do your own research and consult with a professional before making any investment decisions. Keeping these trends in mind, it's clear that the journey to $5, though possible, won't be a smooth one for Stacks. In conclusion, will Stacks hit the $5 mark? To answer that, we have to look back at what makes Stacks unique. Its integration with Bitcoin, its use of the Clarity smart contract language, and the proof of transfer consensus mechanism all contribute to its potential for growth. But as with anything in the crypto world, nothing is guaranteed. Current market trends show a bearish trend for Stacks, trading below key moving averages with weak bearish momentum indicators. However, the potential of Stacks should not be overlooked. Its maximum supply of 1.818 billion coins and a circulating supply of 1.45 billion coins make it a substantial player in the market. There are challenges ahead, of course. The path to $5 is not a straight line and will require overcoming resistance levels, but these hurdles are not insurmountable. What's important is to stay informed, stay curious, and keep an eye on the developments in the Stacks platform and the wider crypto market. Whether or not Stacks hits the $5 mark, one thing's certain: it's an intriguing player in the crypto space that's worth watching.